On the NASDAQ, that's over 1%. Modest rally, got it. Mike Lee, back with us this morning. Are you buying any stocks at all right now?
Stuart, if I was coming into the market right now with fresh cash, I'd be looking solely at the defensive sectors. So staples, utilities, healthcare, and energy. Less so on the energy side, but the defensive sectors. And then I also like gold and I like long-term treasuries.
Well, are you buying anything? Are you buying any stock? Tell me which stocks you bought.
Yeah, so XLP, XLU, XLV. Those are the three. Those are your staples, utilities, healthcare. Those are your defensive sectors, and the energy sector to a lesser degree. And then gold, GLD. I think we are what we just had with this banking that you were just discussing with Charles. That was a liquidity shock. Okay, the next thing to happen in this cycle is a credit shock. I think it's most likely to happen somewhere in the commercial office space range. That I think is the next shoe to drop. We don't know when and we don't know how, but that will send the market shivering. So, I think this. Go ahead.
So what you're talking about then is a rippling out from the initial banking crisis, which may be contained partly for now, but it ripples out into the real estate market and the bond market backing up these commercial loans. Is that what you're saying?
Yeah, well, I think we already had a problem, and banks were already backing away from a lot of these commercial real estate loans before Silicon Valley Bank. And now there's been a lot of deposit flight up and down into money markets and treasuries, and lending standards are just going to continue to get tighter as we move on here. I do not think we're in a banking contagion, but it's a good time for banks to tighten the belt because the economy is slowing, rates are persistently high, the yield curve is massively inverted. This is a difficult time for banks to make money, okay? And while they're paying 0% on your checking account and you can buy a money market or a short-term treasury at 5%, exactly, it's going to be hard for them to hold on deposits. So this is going to bleed over in the economy, continue slowing. I am not positive on the stock market.
Okay, Mike Lee still with Treasuries. All right, we'll take that. Mike Lee, thanks very much. We'll see you again soon.
Thanks, Stuart.